All right, let me know if you can hear me in the chat. Let me know how you executed today. Let me know how your day went. We're going to do a deep dive onto today's intraday structures, how that dictated who's trapped, who's in control, and then we're going to zoom out to the higher time frame because we have once again entered the dilemma, the best dilemma of the stock market, when intraday is bearish but the higher time frame remains bullish. That is the best dilemma of the charts. Go ahead and let me know how you did. Let me delete some stuff here. Looks like this is green. Took 66.70, it stopped at 1R, waited on 66.11 beyond that. 66.70, so if you shorted 66.70, or did you long 66.70? I do feel like 66.70 should have been a short though. And this one worked out. Did not take a single trade. It was my plan to take false breakdown 66.11. Yep, 66.11. All eyes were on it. It's one of those instances where the market is very bullish. It's still very bullish on the higher time frame. So buyers were able to step in a few points above 66.11. This is pretty much the same thing that happened on September 2nd. And we're going to do a deep dive on the structures and the context in play for the macro time frame because it's very significant. Anyways, let's go ahead and jump into the notes for today. Very quickly, we'll talk about intraday. Just as a heads up, guys, I'm going to be putting the intraday things a little bit to the side. We're still going to do the write-ups. We're still going to include the intraday structures in all of the recaps, all of the notes, and the blueprint analysis. But I have come to a realization that the intraday structures are honestly a little bit too complex and complicated for a majority of market participants. As you can see, there's a lot of lines on my chart. For me, I can read this chart quite easily, and all of these lines mean something to me. And I understand all of the significance behind every single horizontal line I have on this chart. But I think for new traders, even intermediate traders, all of these lines can be a little confusing. So the macro structures, that's taking precedent, that's taking prevalence, that's going to be the main focus. It's always going to be the main focus because I am a macro time frame trader, right? That's how I bought the lows on September 2nd. That's why I shorted the highs on Tuesday, right? I am a macro time frame trader. So if you're confused with these structures, don't fall into the day trading fantasy trap, okay? Don't go on social media and look at these guys that are trading prop firm. It's not their real money. They're not making hundreds of thousands of dollars day trading. No, it's paper money, right? And don't fall into the trap that day trading is the only way to make a good amount of money trading the financial markets. There's always this fantasy in the world when it comes to trading that day trading is the one that's going to make you millions and millions of dollars. But if you do not understand core fundamentals and basics of the financial market, then day trading is going to be extremely difficult. And day trading is extremely difficult, period. Day trading on a piece on paper is more difficult traditionally than swing trading or buy and hold investing or doing premium selling, right? So when you're day trading, definitely keep that in the back of your mind and always keep in the back of your mind the dilemma of retail versus institution. When retail is bearish, you should probably be bullish, right? So let's just go ahead and jump into these notes. Before we do that, let's talk about the premium selling. For today in the live stream, we actually took a new premium selling position October 7th. October 7th is the expiry, and Rich sold the 6,300 strike. So there's a pretty good chance, there's a 99% chance that those premiums will expire worthless. I don't know who's paying for those premiums. It's fairly weird that anybody would pay for those premiums. Maybe they needed a hedge. I guess that makes sense. But those premiums, 6,300 strike with MES, October 7th expiry. We did that in the live stream today. And those are a pretty good chance to expire worthless, as a minus 7% dip in the S&P 500 by October 7th is absurdly unlikely unless the real world is to produce some sort of a market crashing event. Obviously, that's possible, but that's very unlikely. That's the option premiums for today. And if you're interested on the option premiums, definitely reach out to Rich. That is his specialty nowadays. He's making very good cash by selling premiums. Very good cash. So reach out to him if you're interested. For today, sellers defended Tuesday's low breakdown trigger overnights, giving them firm intraday control. We have to now watch the macro high quality lows of interest and apply the entry models for the inevitable short squeeze via selling exhaustion. This has been the cleanest selling in a very long time. Breakdown into defending the breakdown triggers into further breakdown. Notice how sellers are still taking the elevator trip down the range. However, overnight sellers defended yesterday's major breakdown trigger at Tuesday's low, and price flushed once again into 66.70.25, high quality low of interest. As we know, when true selling is active, many supports will be ignored, no matter the quality, because that is simply an ES trading principle. If there is to be true selling today, then sellers should continue the flush into RTH. Bulls recovering 66.70.25 can lead to a nice bear trap short squeeze into the gap fill. Sellers holding below 66.70.25 and yesterday's low 66.78 is the goal for them. The recovery of these levels can lead to a backtest of the overnight highs in the middle part of yesterday's range. A breakdown below 66.70.25 with no bear trap cements selling activity on the macro perspective, in which I will be patient and allow price to sell off into 66.11, which is the next macro high quality low of interest. Intraday is bearish until they get squeezed out of the water. Bulls must recover 67.01.75. The false breakdown of 66.70.25 high quality low of interest will be a massive kickstart. Yesterday's low 66.78 recovering will be the first sign of a short squeeze and a major W for intraday buyers. But 66.70.25 must print a false breakdown, or we break down further, in which 66.11 will be the next high quality low of interest for me. But the entire FOMC range from last Wednesday is significant. So I had a few conversations with a few members. They were asking about the FOMC range. I've been saying for a long time now in the notes that the entire FOMC range is significant. And today is a prime example. However, your trade plan needs to be adjusted to whatever that you want to trade. If you want to trade the FOMC range and you have it written in your trade plan, if you're trading the retracements and the higher lows of the FOMC range, there's absolutely nothing wrong with that. Nobody can argue against you. If you're focusing solely on the 66.11 false breakdown, the bottom of that range, there is no argument there. Nobody can argue against you. That is a good trade plan. It just depends what you want to do. And if the range of the FOMC fails and we are to slice below the low, then you have to take those L's within the range and look to hunt the false breakdown of 66.11, because 66.11 is still significant macro support until proven otherwise. So let's jump into the chart here. Let's go to the 15-minute. So when we opened at 9:30 a.m. right here, notice how price action held below 66.70 in the pre-market, and we held below the Tuesday breakdown structure that started yesterday. Holding below those levels would showcase weakness, and because the chart was showcasing weakness, we ended up flushing into macro supports. That's what we needed to see for bears today. They needed to hold below 66.70, and they needed to hold below Tuesday's low if they were going to create further downside expansion. That just needed to be the case based on the market structures for today. They were successful in doing so, and because the market was weak, we flushed into 66.31.25 and 66.39.25, right? We also had a very tiny reaction in the pre-market at 66.53. So when we zoom out now to the 1 hour and we look at the range of the FOMC last Wednesday, you can just draw a simple fib here. You notice that the 786 retracement is aligning with 66.31 and 66.39. So if you're somebody that traded the zone right here, there's absolutely nothing wrong with that. And if you draw a measuring stick from the overnight high into 66.31 That's a 75 points overnight range plus RTH range, 75 points to the downside. You know that selling exhaustion is a core aspect of the edge, right? We talk about selling exhaustion all the time. In fact, in my higher time frame report, I actually now added a whole section about selling exhaustion. So stay tuned for that after hours, in which a minus 75 point straight line dip, right? This is a straight line dip into 66.31.25. Then we can start to trap breakdown chasers. We can trap retail chasers that are chasing a breakdown down here in an intraday bullish environment, and you can apply the false breakdown entry model. But remember what I said earlier, if the range of FOMC is in your trade plan to trade, and you know that 66.31 and 66.39 is that range aligning with the 786 that you want to trade, then you must apply the entry models here. If it's not in your trade plan and you're only trading 66.11.25 to apply the entry models, then there's no trade today. It is what it is. This is the nuance of trading, right? You don't know when the market opens if we're going to flush into 66.11 or if we're going to flush into 66.31 and hold it. You don't know if 66.31 is going to fail and break down. This is why your trade plan and the process of your trade plan is so important to the success of you being a professional trader. Everything that I just said, you can understand how it creates so much emotional trading, how it could create so much revenge trading and hindsight. Because if 66.31, you know that it's a level that you should trade based on your edge and your process, but you didn't write it down in your trade plan, that could lead to a lot of FOMO, that could lead to a lot of hindsight, and it could ultimately lead to revenge trading of you longing resistances. And that's the worst case scenario, right? We never want to long resistance. We want to long support, right? Traditional trading 101. Vice versa, 66.11, if that's in your trade plan. For me, for example, I knew that 66.11 is the only area I'm going to long if 66.70 fails. Price action didn't have the juice to get there. Am I going to long outside of my trade plan? No, because then I'm revenge trading. Then I'm trading based on FOMO, right? That's not what I want to do. If 66.11 gets activated by price action, then I'm going to apply the entry models. That's what I wrote down in my trade plan, and that's my process, and that's my edge. Other than that, congratulations to you guys that had 66.31 through 39 in your trade plan and you executed down here. Fantastic stuff. I saw a trader today in the members lounge that shorted 66.70 and then longed the false breakdown of the first hour low. That's beautiful, stunning. Take a picture of today, post it on your whiteboard, your vision board, your desk, your office, show it to your wife, your dog, your kids. That's some beautiful stuff. Let's continue into the notes here and just want to quickly point out 66.31.25, 66.39.25. This marks Friday, September 12th range low, which was a significant inflection point and an all-time high breakout expansion pivots. Great spot to watch for traps if price is to print a higher low above the FOMC low from last Wednesday, 66.11. So for the day traders in the chat, make sure you're reading the entire ES guide, right? And make sure you're applying everything that I write about. Every single word that I write in the ES guide is important. That's why I try my best to get it out at least 45 minutes before the open so everybody has enough time. If you're a day trader, that means you're behind the desk, right? If you're a day trader, you're behind the desk, you're active, you're ready to react at all time, and you're probably trying to be a full-time trader, in which if you don't have the time to day trade, don't stress yourself. Focus on the swings and focus on the macro time frame structures. Focus on the stocks, the premium selling, and the dip buy opportunities. For a day trader, however, make sure you're reading all the notes and make sure you're aligned with the context, all of the juicy stuff. Let's go to the macro time frame perspective and quickly take a look here. So 66.31 aligned with significant structure from the FOMC range, right? We have the September 12th breakout above previous all-time high, which is right here, 66.23. And you also have the 0.382 retracement using the September range low, so the September monthly low to all-time high. We know that if a trend is going to be strong and continue, then the 0.382 and the 0.5 should hold. And you also have more confluence with the day time frame VWAP and the day time frame 20 EMA, but that is definitely last on my criteria list when I'm looking for a trade idea. Other than that, if you draw using the August low to high, you know that it's a higher low right here. The FOMC low to high, you have the 786, which is in alignment with the 0.382, which is in alignment with the FOMC range, and it's also in alignment with potential selling exhaustion. So for those of us that traded 6630s, that's all the review work that you need to do for today, right? Why you traded it, why you should have traded it. And for those of us that didn't trade 6630s because you had 6611 on your charts waiting for that false breakdown, there's absolutely nothing wrong with waiting for that level to be active, right? If you didn't get 6611, then it is what it is, right? It's one of the nuances of trading. If you miss a setup because price action didn't contest your price, then there's nothing that you can do besides trade off of FOMO and revenge. And that's the last thing that we want to do. So other than that, make sure we're watching the stream recording that I will post in Saturday's blueprints analysis. Let me quickly drag it over here so you guys can see the entire analysis. I really recommend to watch the recordings for today's RTH live stream and tomorrow's RTH live stream, because today was the first time we had volatility during a live stream in a significant amount of time. So definitely make sure you rewatch today's live stream and make sure you notice how calm Rich and I are when price action is dipping. We understand everything that we need to do. And in fact, we even took a nice position with premium selling. And I did a full detailed analysis on why I picked up the hedge on Tuesday, which is doing such a good job for my portfolio, because today Tesla experienced a decent amount of red, right? This position for Tesla, I needed a hedge, right? Here it is actually. I needed a hedge. And that's why I used futures to hedge myself, because I knew that if the market is to reject all-time high, then the Magnificent Seven tickers are likely going to follow along with the leaders if they're starting to pull back. And Tesla is one of the Magnificent Seven tickers. I needed a hedge for insurance. I picked it up on Tuesday at all-time high with the macro resistance, and it's been paying me, and it's going to protect me if the market continues to sell off, right? That's the significance of hedges. Do not sleep on it. Do not sleep on covered calls, and do not sleep on the power of collecting premium. I'm going to talk about what I said earlier today. We sold the 6,300 strike with an October 7th expiry. The only people that are willing to put money into that premium are either gamblers or people that are purchasing hedges for themselves. So if you want to take advantage of the retail traders that expect a minus 7% dip on the S&P 500 within 2 weeks, I truly believe that is some free income. It's obviously not guaranteed, but it's definitely a bet that we're willing to take, that the market is not going to flush down to 6,300 before October 7th. And even if it does, the 6,300 strike is the October monthly low, and that's going to be a significant area for us to look to buy the dip. That's going to be all for today's session, guys. I do have an announcement here that the after hours recaps will be moving over to YouTube starting on Monday. So if you guys want to tune into these after hours recaps, I will not be reading the book today either, but we will be finishing it tomorrow. Make sure you're tuning into the Fibonacci Trap YouTube channel. I have all of it linked in the Blueprint for Success channel. So starting on Monday, I will not be going live in the Discord for the after hours recaps, but the pre-market live stream and the RTH live streams, of course, will still be active in the Discord for you guys. I hope you guys enjoy the rest of your day. A little bit of insight for tomorrow. We're still waiting on 6611. We have some 8:30 external news for tomorrow. We'll see if that creates additional volatility that we've been experiencing for the past few days, or we'll see if sellers get blown out the water with the recovery of last Thursday's low 6670. Then we have 6705, which is a major line in the sand, in addition to 6730 as well. The failure of 6611 is going to open even more opportunity. So the more red that we get, the more my eyes will be lighting up. We have 6577, 6547, and of course the false breakdown of today's low at 6611 will be viewed. Thank you so much for listening. I'll see you tomorrow, and enjoy the rest of your day.